Welcome to BuyTheDip.news. Today is February 24th, 2026. Our AI growth stock model found 10 buy-rated stocks. Here's the full breakdown. The following content is for informational and educational purposes only and does not constitute financial advice. Always conduct your own research and consult a licensed financial advisor before making any investment decisions. EGO, Eldorado Gold Corporation Basic Materials Sector. Gold. Eldorado Gold Corporation, NYSE. EGO, delivered strong 2025 production and operating cash flow driven by Lamaque, Olympias, Kisladog, and FM Kukuru operations, but higher production costs, royalties, and labor inflation drove higher AISC and negative free cash flow due to Scoury's investment. Eldorado Gold guided 2026 production of 490,000 to 590,000 ounces gold and 20 to 40 million pounds copper with consolidated AISC of $1,670 to $1,870 per ounces. With first concentrate expected early in Q3 2026 after moisture damage to cyclone feed pump VFD capacitors and slower power line approvals delayed commercial production. Eldorado also plans $375 to $405 million in growth capital at operating mines, a 60% increase in exploration, and announced a quarterly dividend starting Q1 2026 following significant 2025 share buybacks. With the company reporting Q4 net earnings of $252 million and full-year net income of $520 million. Here are the key growth metrics for EGO. Sales growth trailing 12 months, 37.4%. EPS growth next 5 years, 50.6%. Target price upside, 12.8%. Drawdown from 52-week high, minus 14.2%. 200-day smooth moving average position, 55.3% above. Overall score, 74.5 out of 100. Metric rating buy. Article recommendation, buy. To summarize EGO, article recommendation is buy. Growth stock score is 74.5 out of 100. Metric rating, buy. Hood. Robinhood Markets, Incorporated Financial Services Sector. Capital Markets. Robinhood Markets, NASDAQ, Hood, launched a $1 billion closed-end fund IPO, giving retail investors access to pre-IPO companies including SpaceX, Databricks, and Stripe. The fund already owns stakes in AI software firm Databricks, smart ring maker Aura Health, and UK fintech Revolut, and has agreed to invest in payments giant Stripe, allowing investors to buy shares without waiting for companies to go public. Investors can request shares starting February 17th, with trading beginning February 26th, with no performance or carry fees applying and no minimum investment requirement. Despite the IPO, the stock closed down 0.7% on Tuesday, hovering dangerously close to critical $70 to $72 support. Here are the key growth metrics for Hood. Sales growth trailing 12 months, 51.7%. EPS growth next 5 years, 20.2%. Target price upside, 78.7%. Drawdown from 52-week high, minus 53.4%. 200-day smooth moving average position, minus 32.6%. Overall score, 74.0 out of 100. Metric rating, buy. Article recommendation, buy. To summarize Hood, article recommendation is buy. Growth stock score is 74.0 out of 100. Metric rating, buy. IoT. Samsara Incorporated Technology Sector. Software, infrastructure. Samsara Incorporated, NASDAQ, IoT, is the pioneer of the Connected Operations Cloud, providing a platform that allows businesses with large physical footprints to track and analyze assets in real time using plug-and-play IoT sensors and AI-powered cameras. With its software analyzing data from vehicles and equipment to prevent accidents, optimize fuel consumption, and automate maintenance schedules. Samsara operates as pure software-as-a-service company, serving as the centralized brain for businesses in the physical economy. With growth driven by digitization of industries still reliant on paper and legacy systems, with trillions of dollars spent annually in transportation, construction, and utilities. Samsara's AI video safety segment, which monitors distracted or drowsy drivers, is expanding rapidly and materially reducing insurance costs for clients, while their land and expand strategy encourages adoption across trucks, warehouses, equipment, and workers, generating high net retention and strong recurring revenue growth. Here are the key growth metrics for IoT. Sales growth trailing 12 months, 29%. EPS growth next 5 years, 41.8%. Target price upside, 86.1%. Drawdown from 52-week high, minus 55.4%. 200-day smooth moving average position, minus 34.2%. Overall score, 75.5 out of 100. Metric rating, buy. Article recommendation, buy. To summarize IoT, article recommendation is buy. Growth stock score is 75.5 out of 100. Metric rating, buy. NVIDIA. NVIDIA Corporation Technology Sector. Semiconductors. NVIDIA Incorporated, NASDAQ, NVDA, has come under increased scrutiny following CEO Jensen Huang's absence from AI Summit and appearance at late-night engineer gathering in California, raising questions about strategic priorities amid intensifying competition over next-generation memory. The chipmaker's lack of participation in India's AI Impact Summit and California engineer gathering raises questions about leadership succession planning and strategic priorities. Analysts have raised concerns about NVIDIA's ability to maintain leadership in AI and AI-driven computing as competition intensifies. Investors may view NVIDIA as a high-risk, high-reward speculative play with limited near-term catalysts. Here are the key growth metrics for NVIDIA. Sales growth trailing 12 months, 65.2%. EPS growth next 5 years, 50.3%. Target price upside, 36%. Drawdown from 52-week high, minus 9.7%. 200-day smooth moving average position, 10.4% above. Overall score, 90.0 out of 100. Metric rating buy. Article recommendation, buy. To summarize NVIDIA, article recommendation is buy. Growth stock score is 90.0 out of 100. Metric rating, buy. Pay. Paymentus Holdings Incorporated Technology Sector. Software, infrastructure. Paymentus Holdings Incorporated, pay. Reported record Q4 and full year 2025 revenue of $1.2 billion, with adjusted EBITDA up 45.9% to $137.4 million and a quarterly rule of 40 of 61, driven by record bookings backlog and enterprise client wins that raised average transaction pricing. Paymentus Holdings exited 2025 with $324.5 million in cash, no debt, and free cash flow of $125 million, with management prioritizing organic growth, AI-enabled product opportunities, and deeper monetization of its existing customer base. CEO Dushyant Sharma described 2025 as a significant milestone year, noting that the company surpassed $1 billion in annual revenue for the first time and finished the year at $2 billion. Paymentus exited 2023 with just over $600 million of top-line revenue and had $300 million in 2020, implying the business has quadrupled over the past 5 years and grown 25 times over 10 years. Here are the key growth metrics for Pay. Sales growth trailing 12 months, 44.3%. EPS growth next 5 years, 26.3%. Target price upside, 49.3%. Drawdown from 52-week high, minus 39.7%. 200-day smooth moving average position, minus 24.9%. Overall score, 74.5 out of 100. Metric rating buy. Article recommendation, buy. To summarize Pay, article recommendation is buy. Growth stock score is 74.5 out of 100. Metric rating, buy. RBLX. Roblox Corporation. Communication Services Sector. Electronic Gaming and Multimedia. Roblox Corporation, NASDAQ, RBLX, remains a compelling long-term investment opportunity with strong fundamentals, including robust engagement and retention metrics, record free cash flow, rising creator income, and expanding monetization levers. Despite operating at a loss, the company's trajectory implies the potential for several $1 billion in annual profit within the next 5 to 10 years, making the current stock price an attractive entry point for investors focused on multi-year growth. With an enterprise value of approximately $60 billion, Roblox looks well-positioned to capture additional market share in gaming while potentially expanding into adjacent metaverse markets. Roblox Corporation is not on our list of the 30 most popular stocks among hedge funds. 90 hedge funds held the stock at the end of the third quarter, with 75 in the portfolio. Here are the key growth metrics for RBLX. Sales growth trailing 12 months, 35.8%. EPS growth next 5 years, 26.7%. Target price upside, 73.4%. Drawdown from 52-week high, minus 58.5%. 200-day smooth moving average position, minus 39.4%. Overall score, 72.5 out of 100. Metric rating buy. Article recommendation, buy. To summarize RBLX, article recommendation is buy. Growth stock score is 72.5 out of 100. Metric rating, buy. RDT, Reddit Incorporated Communication Services Sector. Internet content and information. Reddit users shared real-world examples of what they called boring businesses that quietly print cash because demand is steady and operations are straightforward. The businesses quietly making serious money are not trendy apps or viral startups. They're simple, repetitive, and often a little dirty. One boss started out buying a single slushy machine and rented it out, turning it into tents, tables, portable toilets, catering equipment, and even fireworks. Others described construction dumpster rentals and junk pickup routes that were simpler and more profitable than original contracting work. Here are the key growth metrics for RDT. Sales growth trailing 12 months, 69.4%. EPS growth next 5 years, 44%. Target price upside, 67.9%. Drawdown from 52-week high, minus 49.7%. 200-day smooth moving average position, minus 24.4%. Overall score, 83.0 out of 100. Metric rating buy. Article recommendation, buy. To summarize RDT, article recommendation is buy. Growth stock score is 83.0 out of 100. Metric rating, buy. Snowflake Incorporated Technology Sector. Software, application. Snowflake Incorporated NYSE. Snow delivered strong Q3 results with revenue up 29% year-over-year and product revenue growing at the same pace, exceeding expectations. Operating margins expanded meaningfully, and free cash flow reached double digits, reflecting improved cost discipline across sales, R&D, and G&A despite ongoing investments in growth. Snowflake raised full-year revenue guidance to $4.45 billion, implying sustained high 20s growth, highlighting improving customer behavior and record large deal activity. Cortex AI reached a $100 million revenue run rate a quarter ahead of plan, and AI influenced roughly half of all bookings during the quarter, with Snowflake Intelligence emerging as the fastest adopted product in company history, broadening data access across enterprises. Here are the key growth metrics for Snow. Sales growth trailing 12 months, 28.5%. EPS growth next 5 years, 40.1%. Target price upside, 72.2%. Drawdown from 52-week high, minus 43.9%. 200-day smooth moving average position, minus 27.9%. Overall score, 75.5 out of 100. Metric rating buy. Article recommendation, buy. To summarize Snow, article recommendation is buy. Growth stock score is 75.5 out of 100. Metric rating, buy. SRAD. Sportradar Group, AG. Technology sector. Software, application. Sportradar Group, AG. NASDAQ. SRAD. Announced on February 9th that it had entered into a multi-year agreement with NBC for the provision of data and broadcast technology for NBA seasons 2025-26 and 2026-27, including game frame technology that uses AI and live player tracking data to display on-screen graphics during live games. Sportradar Group AG provides sports technology solutions to media companies, broadcasters, and betting companies, including UEFA, NBA, and NHL, and has agreements with multiple major sporting bodies across the world. The agreement builds upon long-standing relationship with NBC and reflects how the company continues to expand the ways it supports their live sports coverage, with analysts projecting median upside of 83.63%, according to CNN's analyst ratings compilation. Here are the key growth metrics for SRAD. Sales growth trailing 12 months, 19%. EPS growth next 5 years, 96.4%. Target price upside, 84.3%. Drawdown from 52-week high, minus 46.7%. 200-day smooth moving average position, minus 31.3%. Overall score, 71.0 out of 100. Metric rating, buy. Article recommendation, buy. To summarize SRAD, article recommendation is buy. Growth stock score is 71.0 out of 100. Metric rating, buy. TLN, Talen Energy Corporation Utility Sector. Utilities, independent power producers. Talen Energy Corporation, NYSE, TLN, continues to attract bullish sentiment as Talen Energy benefits from rising demand for carbon-free power from Amazon Web Services. NASDAQ, AMZN, $18 billion nuclear power contract and aggressive 2026 EBITDA guidance of $1.75 to $2.05 billion. With the company reaffirming a $2 billion share repurchase program and announcing 2.6 gigawatts of new natural gas capacity in Ohio and Indiana. The company also plans to expand its fleet of natural gas-fired power plants across the U.S. to meet peak demand periods, diversifying generation to meet peaking demand when renewables fall short. Trading near $360, the stock trades well below analyst targets and offers limited downside risk, but significant upside potential, supported by strong cash flow, strategic buybacks, and long-term data center visibility. The combination of nuclear power contracts with Amazon, diversified generation, and a robust buyback program supports a bullish outlook. Here are the key growth metrics for TLN. Sales growth trailing 12 months, 80.2%. EPS growth next 5 years, 17.2%. Target price upside, 26.6%. Drawdown from 52-week high, minus 18.5%. 200-day smooth moving average position, 4.5% above. Overall score, 79.0 out of 100. Metric rating buy. Article recommendation, buy. To summarize TLN, Article recommendation is buy. Growth stock score is 79.0 out of 100. Metric rating, buy. That wraps up today's 10 buy-rated stocks on BuyTheDip.news. Like and subscribe for daily signals. Nothing here is financial advice. See you next time.